Actions playing out. Senco is one. Z with the whole confusion about what's happening with Mr. Puneet Goenka, whether he'll continue or not in the merged entity, 5% down on Z. And United Spirits was the other one, which was down about 4.5% on the back of earnings. Well, that brings us to the end of this week and this session. Positive close for the market. Once again, a very, very happy Dhanteras and a very happy Diwali to all of our viewers from the entire CNBC TV team. We will, of course, take a break right now. It's a wrap on Closing Bell, but keep it with us. There's lots more coming up on the other side.
SAMVAT 2079 is drawing to a close. The Nifty has gained 10% and has marginally underperformed emerging markets, but the mid-cap index is up 30%. What does SAMVAT 2080 have in store? Will interest rates stay higher for longer? This is the Editor's Roundtable. I'm Ekta Batra, and with me is Prashant Nair, Nimesh Shah Nigel D'Souza. A very happy Dhanteras and a very happy Diwali to all our viewers and all our guests. Hi, guys.
Hi. Guys, hi. I mean, it's my favorite time of the year, and I think I can confidently say it's all of our favorite time of the year. Colors, dressing up, the mood is up, and of course, one looks at
the two best guests, the two veterans of the market.
I was waiting to introduce both Madhu and Sunil. I must say it's becoming a bit of a tradition.
Yes.
I mean, we were exactly 1 year ago here, learning from both of you. So, so glad that both of you could make it.
Thanks for having us here.
Thank you for having us, and wishing you a happy Dhanteras and happy Diwali to all of you and to all your viewers as well.
Thank you very much. Actually, let's do one thing. Before we go any further, Nigel, why don't you sort of recap the year for us, right? I mean, how has the year been somewhat to somewhat for markets?
Well, let me go across to the big wall. I've been doing this for the last 10, 12 years or so. So let's take stock first of how the data has panned out from last summer to this one. Well, in terms of one big data point that stood out, if you just take a look at the flows, the SIP flows, normally we start off by talking about the FI flows. But I said this time around, let's talk about the SIP flows because that's been rock solid from April till now itself. That's in this fiscal. We have seen it move from around 13,000 crores all the way to around 16,900 crores. So we're asking why the markets are resilient. Well, it's because of you, because the kind of flows that we have seen from all of you. Moving next up to the different asset classes. Now, two global factors have worked for us. One is the cooling off in terms of the dollar index. The second factor is Brent crude prices cooling off. So you like that. Both of them, they result in the Nifty doing quite well. In terms of the MSCI emerging market party, well, we have participated out there, while global indices as well have done quite well. But I'll tell you the rank outperformer this year in terms of asset classes has been gold. That's up close to around 18%. So that's outperformed actually the other asset classes this year. But the big party really has been in the broader markets. The small and the mid-cap stocks, well, they have done very, very well. And the indices itself have given you 30 to around 35% return. So good going out there. But let's tell you about the top Nifty movers first. So let's take the headline index, and a few stocks should come up for you on the screen. You have Tata Motors, Larsen and Toubro, which have given you returns of more than 50%. ONGC, NTPC, as well as Bajaj Auto. All of them frontline Nifty stocks that have done very, very well. On the flip side, a few stocks haven't done very, very well. And a large stock in there is like Infosys. That's been a relative underperformer. That drags the index down a bit. And Adani Enterprises as well as UPL, they have lost their way. But otherwise, in spite of these big losses, well, the bigger boys have done well, and that's why the Nifty is up close to around 10%. Moving to the mid-cap names, well, there's been a big party out there. Some of those rail-related stocks have done well. You have the power financing theme as well that's played out very, very well. And also you have defense and shipbuilding that's done well. And that explains why some of these stocks, they're not satisfied with 20, 30, 50% return. These are up between 200 to around 300% odd. Moving to some of those losers, well, from frontline names, Page has struggled a little bit. Aditya Birla Fashion is down. Gland Pharma, Loris, all of them have seen some bit of pain. But from the broader markets, that's from the small cap names, you have far more stocks that have done very, very well. So you have Suzlon in there that's given you big returns. BSE out of nowhere, that stock has re-rated nearly a 2,000 rupees stock. Apar Industries has continued its beautiful run. Kalyan Jewellers, a re-rating of sort out there. And JBM Auto as well. But there are some losers as well, so some painful points out there. From the broader markets itself, Campus Actbear, well, that's lost its way. We have Deepak Fertilizers, Afas Finances, as well as City Union Bank. So it's been a good move from last summer to this summer. The Nifty is up close to around 10% approximately, but the big outperformer in terms of asset class has to be gold, which is up close to around 18% out.
Nigel, thanks very much for that. So clearly that big move has come in the mid-cap and small-cap part of the market. Gentlemen, to you straight with that setup from Nigel. And I want to start with the mid and small cap part of the market. 30% outperformance. I half jokingly say that the small cap index has been the strongest index, not just in India, but in the world. And probably it'll be true. How is the year as we get into 2018? I mean, somewhat 2018 looking for the mid and small cap part of the market. Madhu, why don't you start?
So I think there are two observations which I would make. A, you have to also look at the base effect from where they are coming. Maybe the prices which happened at the time of COVID, they were a bit also unrealistic, Hence the rise is also looking a little bit abnormal, right? Maybe those prices were also, so that is one thing which you have to keep into account. Second, I think there is no just point looking into price performance in isolation. You have to also look at what has happened to the fundamentals, earnings. A lot of these companies have gone a long way in terms of reforming themselves. Debt level has come down significantly. Earnings have really improved in many cases, and as you know, I mainly invest into that space, so I can vouch that there is meaningful improvement. Having said that, I would clearly see that there is no party everywhere. There is pockets of exuberance, there is pockets of overvaluation, undoubtedly. And if you are investing now into mid-cap and small cap index, you have to be very careful. And you can't have a one-year view. No mid-cap or small cap company, at least I would invest with a one-year view at this level.
So, Madhu, you spoke about earnings doing good in the broader markets, but the other big theme which played out in a lot of the mid-cap stocks was the cleaning of the balance sheet. They've reduced the debt well, big time, right?
Big time.
And you've been into some of the stocks where there's been a massive turnaround in terms of balance sheet repair. Is that the big theme that you're going to focus on in the next year as well? Look for companies where...
I would focus on that theme for many years. Nimesh, I would say my biggest observation is that we've been investing now for 30 years.
Yeah.
Was पहला बार promoter को ना real wealth दिखता है. That they have really started believing ये market cap real है. Because the peer group of the lot of promoters, they've been able to encash, they've been able to partially encash, even when the prices have run up 10 times, 20 times from the bottom, people are able to sell. And you see how so many promoters have sold systematically over the last 18 months. In spite of that, this rise is there. So I think with the broader participation of public by and large, with 13 crore demat accounts being there, with improvement in balance sheet, with promoters believing now that koi hanky dory nahi karna hai. These good companies are now believing. So I think it is going to continue to be a story for a long term. However, I must again put a caveat that it is not that you can buy any mid-cap and any small cap and make money.
But Sunil, what is your view on the BSE small cap index rally, 37% in 1 year? Do you think that there would probably be some tempering, some consolidation which will take place? These superfluous returns are not going to repeat at least for the next 1 year.
No, so I think a few things. One is, as Madhu mentioned, they are coming out of a low base. Second is, when Nigel was presenting, you saw so many companies having tripled. And at the same time, there were so many companies which had gone down also drastically. So when you look at the smaller companies, index might not be the best way of looking at them. Because they comprise of so many companies which are so diverse. You have so many listed companies coming up now, new ones, which are trading at some obscene valuations. And then you have some companies which have been there for a long time. So it is possible that going forward, the index might not reflect, because some of these companies are definitely significantly overpriced. And they might correct, and that might put pressure on the index. But there is more than enough to do at the stock-specific level. And we are getting into a phase, we all mentioned about debt cleaning and all. See, what happened was during COVID and a couple of years post that, no company had the confidence of spending money on capex. So normally 75-80% of the corporate profit pool goes into capex. That fell to 45%. And that's why you saw this huge reduction in debt, because if you had no capex, you reduced debt. Now a lot of these companies have balance sheets which are light, businesses which are much stronger, and opportunity, hopefully, which is much larger. So when the phase of growth starts, I think you'll have to start now banking on companies which have the balance sheet, which have the business, and which can take, or advantage of this huge growth ahead of us. So I would say I don't know about the index, but there is lot to do.
I'll just make one more point. Normally we always tend to look at things keeping history in mind. But some of these things were not in history. Like the PLI was not there in the history.
Right.
So if you have 2 lakh crore rupees of PLI benefit flowing over the next 5 years, theoretically it means that there is 40 lakh crore rupees of turnover which has to happen. Right? And effectively 10-12% EBITDA margin, which means 5 lakh crore rupees of new EBITDA has to come. And I don't think in India anyone is going to forego any incentive which is provided to corporate sector. So now this was not there. Right? This was not there. So when we are comparing the past, valuation, we have to also look at the new factors which have emerged.
one way many people put it is that the easy money is made. Is that an okay way to put it? Because both of you are stock pickers and you will always find opportunity. But for the audience which is watching, would you say, as Madhu put it, you have to have more than a 1 year horizon? It is not as easy. I think that was the message. Sunil, would you agree with that?
So see, nothing is easy, and there is no easy
Markets are
money.
not meant to be easy.
In hindsight, it is so easy. You know, अभी वो देख के लगता है कल्याण ज्वेलर्स 70 का 320 हो गया. It was so easy, but at that time it was not so easy.
Correct.
So I don't think anything is easy. Yes, it is now a little bit tougher than it was maybe 1 year back or 2 years back to pick stocks because stocks have moved up, the things which are doing well. But I think that is the nature of the market. You'll always have phases where there will be consolidation, where there will be some events which might give you the correction. 1 month back, there were stocks which had fallen 20-30%. They are back to the September level because Israel happened, Hamas happened. In March of this year, post the Credit Suisse blowout.
31st of March was that.
16,500, and we were all talking about, what will happen, God knows. People who had stock, they were crying that why didn't they sell and so on and so forth. So these kind of events can always happen. So I think markets are never easy. But if your return expectations are, more considerate, there's more than enough to make. And this 37% index, I again highlight, 37% index or a 20% or 30% index in mid-cap is not giving me the
true
complete
picture.
There are so many stocks which have gone up 100, 200%. There must be at least maybe 200 stocks which have double, tripled,
I think
I'll make one very strong point.
Yes, please.
See, the number of retail investors who have come in the fray from, let's say, 4 crore pre-COVID to 13 crore. Prashant, I am telling you, this is the first time retail investor has actually made money.
Yeah.
Who was buying Suzlon at 2 rupees?
Correct.
I don't think any institution was buying. तो किसी न किसी तक के तो घर पे वो शेयर था ना.
Retail and HNI.
Retail and HNI. I'm saying, but majorly retail.
Retail is also made money.
Majorly retail, I would say. So if you look at the spectrum of depth, in the spectrum of the money which is being made by actual retailers, by fluke, whether they were losing money or they actually made money. They have actually recovered a lot of money. So if you tell me that the retail investors are going to go from 13 crore to 8 crore in the next 12 months, I will tell you be cautious.
Okay. Absolutely.
And you just have to track the number of shareholders. In fact, you can do an analysis for every company. You can track now the number of shareholders every quarter. You will know what Madhu is saying. The number of shareholders have gone up dramatically.
I won't do SAMVAT to SAMVAT, but just one point. I know that what we want to discuss with Madhu and Sunil is stocks and themes and sectors, but I'll make one quick detour, which is the global aspect of it as well. So I'll go across to the wall.
The best at it,
No, I'll just... these are not stock returns, but this is, I think, will be a big theme as we go into the next year as well, right? So what we're basically doing is, this is not 1 year, but this is like approximately 1.5 years. The question is, we got into a very large global interest rate hiking cycle, and now finally the question is being asked is if it is done. I mean, now at some point the next action is going to be maybe a cut down the line, not immediately, but is the hiking cycle done? So I thought it makes sense to just put it in one place. I mean, the US, and unimaginable, I mean, 1.5 years back, rates were basically zero. US interest rates have gone up 550 basis points in the last year and a half. In the euro area, that's the deposit rate, has gone from negative to 4%, so that's 450 basis points. UK, big 500 plus basis point increase. Australia, 400 basis points. In India, it went from 4 to 6.5%. There's a 250 basis point increase. And the only large place where interest rates still remain where they are, with absolutely nothing, which has happened so far, is Japan. And that is the big one people are talking about, whether we will see something in Japan in the coming year as well. Madhu and Sunil, what do you think? Do you have a view, first of all? I know, you guys want to talk about stocks, and we'll get to that in a bit, but is the hiking cycle done? Sunil?
Yeah, so you are right. I think this data is very startling. It is like a 30-40 year record in terms of the pace and the intensity of the hike. Now, if you come to the US, the inflation has been very sticky. But one reason the inflation has been sticky in the US is because the labor as well as the real estate is a big component of their inflation index. Actually, if you see all the components other than these two, whether it is agri commodities, metals, food, now even oil, they have all come down dramatically from where they were maybe a year or 15 months back. So logically, inflation should have come down. But because of these labor issues or labor tightness and the real estate market, inflation was not coming down. Finally, the real estate market has started to crack. Because at 7.5% mortgage rates, I don't think anyone is going to buy a house in the US.
Correct.
And I think that's why our view is that inflation will start to now surprise massively on the downside as far as US is concerned. So I am a big optimist that with a $33 trillion debt, for US to pay 5% interest is 1.65 trillion. They would rather pay 3% interest rather than 5% interest. So it's a matter of time before interest rates come down. And I think there were two headwinds globally. One was the macroeconomic and the other is the geopolitical. So I think the macroeconomic headwinds are now going away. Maybe the growth will take some time, but our view is that inflation is coming down very clearly. And even on the oil side, despite what is happening in West Asia, oil is lower than when the Israel and Hamas conflict started. It is clearly showing that there is enough supply. Supply is being restrained. This is despite the fact that Saudi and Russia and all the others have cut oil production. It is not that they are producing at full level. And any company we meet has a 20%, 50%, 80% strategy of moving away from fossil fuel-based energy to solar and all. So I think we are getting into a phase where we can start to get good news coming in.
Madhu, any thoughts? You want to add to that? Or
Why I'm smiling, Sunil is going to have a good laugh. At some point of time in my career, actually, I ended up becoming a macro analyst. And I was making all kind of macro presentations and all, they never could tell me anything, but they used to laugh. What's wrong with this?
Behind his back, sometimes.
So that's why I was smiling. But, what I feel, Prashant, the simple thing is, when interest rate was at 1%, did anyone tell you, or did you read any report saying that it could go to 5%? No, right? I think we only know broadly the direction of what things can be.
Absolutely.
And I think markets, in a way, have absorbed this, right? It's not a state secret.
Correct.
Now, अभी 1 का 0 का 5% हो गया. अभी 8 आना और बढ़ जाएगा तो I don't think markets are going to be overly pessimistic keeping this. And I completely agree with Sunil. Direction-wise, I don't know whether it will be 4% or 4.5% or 3.5%. I don't know that. But directionally, I think the worst of the headwind, in my opinion, is behind us.
Okay.
From a market perspective.
Okay. Got it. Actually, on that point, I spoke with Manish Chokhani of Enam Holdings yesterday. I just want to play a quick, small soundbite. This is his view. Manish's view is that, we all believe that the US will continue to print, no problems at all. But he says, well, the day of reckoning is coming for the US, not for us. He thinks that we're in a pretty good shape. He says it's closer than you think. Just want to play out that very small soundbite, and then we'll come back and discuss more with Madhu and Sunil.
Pain has been taken by the central bank. Central banks actually are technically all bankrupt. And while they are trying to tighten, the fiscal side is as loose as ever. So the US government is printing money like no tomorrow. So how Japan has been bankrupt for the last 30 years and slowly decaying, the same thing has happened to UK, the same thing has happened to Europe, it's happening to US, and there will be massive disruption, in my mind, in the currency markets, which will be sparked by a bond market event.
In this year, in our lifetimes, in near term, long term?
I think it's closer than it ever was.
Okay.
The flip of it is, the good news is people are therefore desperate for where there is stability and where there is growth.
Okay, so that's some more perspective on the macros. We need to take our first break of this show, but on the other side, we'll put the spotlight on the PSU space. How has that sector performed from one SAMVAT to the other? Who are the top gainers and the losers? More on that on the other side. Stay tuned.
Welcome back. Well, we were discussing various themes from last Samvat to this one, and one theme that really surprised and took everyone by surprise actually has been the PSU theme. Every time you thought that the rally is over, but many of the stocks have done well. Well, Nimesh, you're going to take stock of that. Tell us more.
Well, Nigel, the PSU index has behaved like the Virat Kohli of the Indian team, consistently performing and hitting centuries as well. So let me just go to the wall and explain why I'm saying this. The PSU index, the Nifty PSU index, has been among the top performing sector in this Samvat in the last 1 year. Look at the performance. The index is of 49% in the last 1 year. And if you look at the last 3 year performances as well. Okay, first let's look at the indices across the board. The Nifty reality index is up 52%, but look at the Nifty PSU index up 52%. The Nifty PS index is up 49%. The Nifty CPS index is up 46%, and the likes of small cap and mid cap have also rallied pretty hard in Samvat to Samvat. Now, as I said, it's not been only this year, but look at the last 3 year performance of the PSU index. In 2021, the index was up 62%. I'm talking about the index up 61%. Last year it was up 2%, and this year again it has rallied 49%. So consistently the PSU index has delivered, and it looks like now the PSU index has taken the mantle of the leadership in this market. Now just look at the big outperformers of this PSU within the PSU basket. RVNL, that stock is up 335%. Aircon is up 260%. IRFC is up 250%. Power Finance and Mazgaon all have rallied at least 2x in the last 1 year. This is just last 1 year data. Stocks which have rallied between 100 to 200%. ITI, SJVN, Railtel Corp, Hultco is up 120%. NLC, NBCC, Cochin Shipyard, and the list goes on. So that's a big mover between 100 to 200%. There are also other mid-cap, small-cap stocks within the PSU basket which have rallied pretty hard. Vale is up 90% this year. GIC is up 87%. Something like GERC, HAL is up 70%. It's not a small cap stock now. That's rallied 70%. New India Assurance and the likes of MOIL up 62% as well. So big move we've seen in the PSUs in the last 1 year. Other big gainers includes the likes of Andrew Yule, Oil India. Mishra Dhatu is up almost 52%, and the likes of MMTC and Indian Oil Corporation up almost 50%. So that's the kind of rally we've seen in the PSU stocks in the just last 1 year. There are only few losers in the last 1 year. The likes of Concord pretty much flat. There is IRCTC which is down 9% in the last 1 year. But the big move has been in the PSUs and consistently performing in the last 1 year. So, as I said, the PSU index looks like has taken the mantle of leadership, and that's where the big performances come, up 50% in just last 1 year.
Okay, all right, thanks a lot for that, Nimesh. Gentlemen, what do you make of that? The PSU team, I remember some few years ago it was touch me not. And the last one, if you didn't touch them, you would have missed out on, big returns. So what's it take, Madhu? You go first.
So that's unfair. I think we were always, at least Sunil and I have been always the
no, I'm saying the
broad market. But I'll give you one stunning data, which was not there on the wall because it is Samvat to Samvat. In 3 years from now, the total market capitalization of all PSU stocks 3 years back was 15 lakh crores.
Okay.
And it went to 45 lakh crores. The whole PSU market cap, which includes all banks, all oil companies, all defense, railways, all kinds of companies.
Right.
So there is a 30 lakh crore rupees of wealth which got created. And I think roughly 40% of this is actually held by public.
Yeah.
Government holding, weighted average, I would say, will be maybe close to 60-65%.
Right.
So there is a lot of wealth which has got created, undoubtedly. So again, going by this, this looks like clearly the leader, and I want to make one small point. Again, a lot of people who I have come across in my career, they set rules. That government company lene ka nahi. So all those rules, I have to be reminded in these kind of times.
Yeah.
That you can still get away by something or the other. But I don't think keeping an open-minded really harms you in the markets in the long run.
Sunil, let's just narrow down within the entire PSU space to PSU banks, because that has seen asset quality improvement, loan book growth. There's really a change in terms of the fundamentals which have taken place. Do you think there's further upside because the rally is in place?
So see, there are obviously some reasons why PSUs did not do well earlier. There were a lot of intervention from the government and so on and so forth. I think I'm saying this because it was more applicable to the PSU banking side. When you're in a lending business, It is said that there were interventions of whom you should lend, collection systems were an issue and so on and so forth. And if you remember going back 4-5 years, they hardly had any capital because they were reeling under NPAs, they had net losses and the government had to continuously out of the budget keep on refinancing them. Now you see that there's a complete yo-yo. Public sector banks are giving to the government record dividends.
Yeah.
So what they took in, they're giving it back. I think the processes have improved dramatically. You don't hear the kind of stories which you used to hear in terms of doing something to get loans approved and so on and so forth. For the first time, we are seeing you can say willful defaulters getting imprisoned, which has never happened in India. I think that is also changing the sanity, the habit, the hygiene factor. And banks are still significantly at a discount compared to their fundamentals in isolation as well as in comparison to the private sector banks, as well as in comparison to the overall market. See, in an overall market where nothing is below 20, 30, 40 P, you still have some of the second tier PSU banks available at 4, 5, 6 P with a growth rate which is comparable and with ROEs which are now 16, 17%. I have not seen for the last 20 years, and I used to track banking very closely, that very consistently ROEs for public sector banks trending to 15, 16 and 17% and no need for any capitalization from the government. So I think they are in a decent wicket, I would say.
Just to put into context, all of us will be going for a lot of Diwali parties. Sometimes you reach at 8 o'clock, you say party was good. Now, but 10 o'clock it's become. And suddenly you realize that when you left, actually the party rocked even more. So if you got out of any of these PSU themes, some part of the year,
party
you're abhi to party shuru.
नहीं but अभी party शुरू हुई है कि
I don't know about the PSUs overall. So we have some exposure to PSU. I would lie to say that we have been big beneficiaries because defense and all, it was very difficult to take a call per se because there is only one customer, the government of India. And you have to depend on one customer for all your businesses. So in a format where you're managing public money, this sometimes becomes a little tough. But there are pockets where there is still decent growth. There are pockets where they have I would say a little bit of edge also. If you look at large power companies, for example, their size is so huge. There is potential. They get preference also. They have capital. Or banks, there is moat in a few of those banks. So I would say there is definitely. At the same time, some of the PSUs where the float is limited, retailers come in, pile down. There are some PSU banks which are trading at 3-4 times book also because the float is limited. So you have to be very choosy. I would not say that you just club everything into PSU and say now kal se khali yehi kharido. I don't think that would be wise.
Okay, we'll take a quick commercial break. We've been told to do that, so we'll do that. We'll come back, more conversation with our market masters on the other side.
Welcome back. You're still tuned into Editor's Roundtable, the Diwali special. One of the big cues coming up is the general elections next year. So how exactly have markets historically performed ahead of such a big event? Just a couple of statistics from an Anand Rathi report. So India is likely to go to vote between April and May of 2024. Now, what exactly has been the change in terms of the equity markets 6 months prior to the polls? If you look at it, there have been double-digit returns all the way since 1999 to 2019. So, for example, in 1999, it was 30%, 2004, 19.5%, 2004 and 2014 and 2019, it was around 13%. Now, what exactly have the returns been for the equity markets? 12 months, which is during the election year, 6 months prior and 6 months post the general elections. We have, in fact, got a minimum of 10% returns in the past itself. 2019 was the minimum at around 11% if you track 20-year data. But we had, for example, 50% returns in 1999, 16% returns in 2004, 2009 was around 55% returns. So it has been handsome in terms of returns, and there's a likelihood that based on historical data, we could see some amount of an equity market rally ahead of the elections as well. Now, separately, how exactly have the markets done during the festive season, which is basically Diwali as well as Christmas, which is generally the Santa Claus rally? It comes during Q3 of the fiscal or the last 3 months of the year. Now, the average Nifty return, surprisingly, since the Nifty inception, which is in 1996, the March quarter was 0.4%, June quarter was around 3.9%, the December quarter was 5.7%. It beat returns in all 4 quarters. Quarterly performance for the last 10 years, similar gains in the December quarter for the festive season, 4.9% in the past 10 years as compared to, say, the June quarter at 4.5%, September quarter at around 3.8%. So all this tells you that maybe it is the festive cheer historically which will play out for the election, for the markets, and the elections might just be an opportunity for the equity markets.
Thanks very much, Ekta, for that. So on that point, I want to just play out another small soundbite. This is Ramdev Agarwal, Chairman of Motilal Oswal Financial Services, and we spoke with him recently, and his point is, and he stuck his neck out in that sense. He said that the market will take off after state election results. And I actually specifically asked him, does it depend on a particular outcome? His answer was not really. So just want to play that out, and then we'll discuss this with Sunil and Madhu.
I think the rally could start immediately after 7th December election.
Because depending on the outcome or irrespective?
Irrespective.
Irrespective.
I mean, if it is very bad outcome, then market may correct a little bit and then the rally will start.
You think we will have a rally into general elections?
Yes. Because this is what happened in October 2014.
Okay.
I mean, the moment in Goa, Mr. Modi was nominated as the Prime Minister candidate, I think the market actually rallied before the election. After that,
it started in October 2014 to 13.
13, yeah. October 13 to 14.
Yeah.
So that is the kind of a timeline we have this time.
Okay.
I don't know what the market does, but my sense is that depending on the result and the mood, we could rally.
Okay, all right. So that's basically the data that we've presented. Maybe there is optimism. Madhu, what do you think? Would you be a buyer going into next year ahead of the general election?
If you're talking of market in general?
Yeah, in terms of the equity markets, do you think that there could be some amount of returns that we could see, ahead of the general elections? Or do you think that there's maybe some uncertainty, you want to have higher cash positions?
I wouldn't say that, I would make my mind keeping general elections only in mind. I would say that, no one knows the outcome. See, we are in the business of always looking at risk reward, and we are in the business of looking at companies, right? If companies present opportunity, I wouldn't excessively worry about it from now. Right? It's still 6-7 months away. Who knows what will happen in the next 6-7 months, Companies' fortunes have changed in the last 6-7 months. So I wouldn't unduly worry about it right now. And what if, let me reverse the question and ask. If Modi ji comes back with 280, 290 seats, will I get an opportunity?
Sunil, what about you, Sunil?
No, so I think we are getting into a very interesting next 6 months. And, election is one aspect of it. So actually, if you see, foreign investors have been selling last 3 months. It's a function of US yields, US dollar strengthening, and generally emerging market as an asset class just becoming useless. Last 10-year returns have been zero. So a lot of money has been moving out of emerging markets. But another class is coming up, which is emerging market ex-China, where you have started to see huge flows. So I think that class is going to strengthen, and India will be a big beneficiary of it. November to February, March anyway is a very busy season where reallocations happen, and we are already in discussions. I think we are getting a sense that money is going to come into India. Now, you have, like, on one hand, foreign investors selling and the domestic buying. What if both start to buy? So that is one thing. The other thing is, we mentioned about US interest rates and all. I think the probability of rates coming down are now more than going up, and that will also play off in the next 3, 4, 5 months. Third is the only reason which a lot of large investors are not investing in India is, one, they feel the valuations are very high, and second, they are waiting for the elections. I don't think anyone is waiting to sell on the election result. At the margin, people are just waiting to buy on the election results. And I think the probability of what the market wants is significantly higher than the other ways. So I think that we are in a phase where there are a lot of events which are more positive. And then you will have the December quarter numbers, which are going to be significantly better, because we don't have to forget the fact that this time the festive season and the wedding season had got shifted by a month. So the companies which did not do well in September, they will all rock in the December quarter. So, and those results will also play off. And then you'll have vote on account. Obviously, there will be some expectations. It will be a mini budget. A lot of positive events lined up. And I think election would be just one of them.
People are waiting to not sell, but waiting to keep thoda acha price mil sakta hai ki nahi mil sakta. Well, waiting to buy, basically, as you said, right?
Yeah, the valuations, whether it is 16.5p or 17.5p or 15.5p, for a 3-year investor,
doesn't
5% up and down, I don't know how does it matter. And even when the price falls, you're not able to buy.
Correct.
So recently we had a correction, but you were hardly able to buy anything. So if you want to put sizable money to work, you have to buy when the stock is available.
Prashant, there is one important point here, that the whole India story now is known, right? We are not discovering India story. It's known to the lowest denominator person also. The world also, everyone knows we could grow, best economy, decade belongs to India, 6-7% growth rate, huge FDI, problem in Western market. These are all known facts and much publicized, right? And a lot of people have not yet got into the story with full heart, right? It's easy to talk, but still there is so much amount of money, which is domestic money also, which is away from equity. So I'm saying, if that money has to really reconcile with this broader India story, the only hope is fall in the market and we get an opportunity to buy, which is why you saw any correction which comes is very short-lived, and it is met with huge buying from the domestic investors.
Okay, all right. Let's do one thing. Let's slip into a short break. We come back and we'll talk about select themes as well in terms of big turnaround stories. You don't want to miss this. See you on the other side. Welcome back. You're tuned into Editors Roundtable. Well, all through the show, we have been talking about the faith that you have shown in the equity markets, and also you all made a valid point, Madhu as well as Sunil, at the start of the show, that promoters now have realized that how important it is to keep their books clean and do the right thing, because these markets otherwise will teach you a lesson that you'll never forget. Either they'll make you a lot of money or they'll do that. The turnaround stories, they have been very, very interesting. Many people, retail, have participated as well. So tell us about a few of those names that have done well as well. And are there more such turnaround themes that you're looking at in the time to come, with due disclosures as well?
Obviously, this is not a recommendation to buy, and we are just discussing for an educational purpose. This year, one thing which has really worked out, because the base of retail investors is so high that the money is available, not only for really good corporate, for good businesses who are into stress also, right? So in recent times, if you look at, one of the biggest turnaround which I have seen is in Suzlon, right? In the last 12 months, they have raised 3,200 crores. First 1,200 crore rupees of rights issue, and then 2,000 crore rupees of QIP. In spite of that, first raise that happened at 5 rupees, last happened at 17 rupees, and the price is today 40 rupees. So company is now 50,000 crore market cap. A company which was really in stress, that bankers had converted loan into equity. But why was this possible? This turnaround was also possible because of the market. Yes. If they had not got that capital, I think it will still take them few years to be in the health which they are today. Right. So in a way, it is a virtuous cycle. If the market does really well, a lot of companies where the capital is a problem, those people are able to access capital because of the market move. And this story is not one. You will find like dozens of them, able to raise capital and recapitalize the balance sheet. People who had got excessive debt, like talk of Inox Wind. And they've also raised close to 2,000 crores now between the IPO and 2 rounds of QIP. So I think this money being available in the market is also in a way helping these companies to turn around faster than what they would have taken time.
Are there any common characteristics when the famous saying that turnarounds rarely turn, but they have turned? I mean, there are so many examples, and we have graphics up on air as we speak. Sunil, are there any common characteristics?
So see, one is you need to have a genuine business, a genuine business which is scalable and which was not able to scale up because of constraints. Constraints not in terms of capacity, constraints in terms of capital available, and constraints in terms of even debt available. And obviously the business opportunities also changed. So the 2 examples which Madhu gave, there the business opportunity itself has become 5-10x.
The industry was doing very well.
Which was not the case last 2-3 years, because there were some regulation changes where solar started getting preferred over wind and so on and so forth. Now, the policy is a composite policy. You just can't have solar, you need to have a combination of other renewables also. At the same time, they were constrained, not because of capacity. Capacity was there, but because of working capital, because of other modes of capital. I think that is definitely one characteristic. The other thing is, the intent from promoter is the most important. Because you just don't want the promoters to raise capital on hope. Here, there was a clear plan that this is the capital which is needed to. Investors were very, clear that we want to monitor where this fundraise is going to. So I think there was a lot of discipline also. So I think there are characteristics. See, every turnaround might not work out, but if you have basics in place, there is more than enough possibility that they might work out.
Are these turnaround stories sector agnostic, or are they emerging from certain sectors which are supported by the external environment?
So, Ekta, see, turnarounds will normally happen in sectors which are little capital intensive. Because the fact that they went belly up was because their debt equity, there was a mismatch, the huge interest cost came into being. So typically these will be sectors where there is a little bit of more requirement of capital. Because, turnaround, if you're banking on infusion of capital to turn them around, obviously they have to have capital intensive. Like there won't be a turnaround story in a consumer product, for example.
I will also make one point. A lot of these turnarounds are not happening only because the markets are providing them capital. It's also happening because the business conditions for a lot of these companies have improved meaningfully. Like you take, for example, JSPL. It had a more than 50,000 crore debt in 2018, and it is now virtually debt-free. Virtually debt-free. and they have not raised any meaningful capital from the market. So there are lots of examples like that where, like all the EPC companies, you look at the balance sheet of all of them in between 2008 and 2018, and you look at a lot of the balance sheet, how dramatically they have improved. Not many of them have raised capital. So I think it's also a combination of businesses actually doing well, respect for equity, which I will emphasize again in majority of the promoters, and also market helping wherever it is required.
One additional thing, I think promoters have also become dispassionate. They know that if they let go one portion of the business, at least some portion will survive, which is very different. You know, promoters love their businesses. Earlier there was resistance of getting out of anything. Now, you know, few companies have also turned around because they were able to use the proceeds of selling one part of the business to at least ensure that the other survive. And we have multiple examples even there.
Okay, all right.
One last point. Before him, because again very important, a lot of wealth has also got created because of the change in the management itself. Right? People like CG Power. What happened, you know, if it was a real stress case, but the really good manager came. And there's not one, there are really lot of examples which are, that is also added to a lot of overall turnaround in the corporate sector.
Okay, all right. On that positive note, Madhu as well as Sunil, wish you a very happy Diwali, and I'm sure we're going to interact with you for the next entire year. It's a wrap from all of us on this Diwali special of Editors Roundtable. Thank you very much for watching.